Dude, what would you do if I gave you $10? How about $100? What about $1,000?
Oh.
How about $10,000? What would you do if I gave you $10,000?
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting. You'll spend it and be broke again.
Welcome back to the channel, guys. I'm your bro Taylor.
And I'm your bro Ryan.
And like we said in the beginning, we're going to be going over what we would do if we had $10, $100, $1,000, or even $10,000. And since Ryan asked, what I would do with $10 is simply build good habits. Because the reality is $10 isn't life-changing money. You know, you're not going to be able to be like, oh, I can afford a house now. But you can build good habits. Don't waste it on fast food or things like that. There are a lot of better things that you can invest this money into. Like option 1, micro-investing. There are so many apps out there that make it super accessible for people to invest in the stock market. And you can buy partial stocks for as little as less than $1. So $10, you could easily invest into something like the S&P 500, let's say, that diversifies things for you. And you'll see that money grow over time. And taking that first jump into investing is huge because it breaks that psychological barrier of like, oh, investing is just for the rich. That's not really for me. It's not accessible to me.
And now option 2 is going to be investing in your education. Whether that's buying a book, maybe buying a simple course, maybe buying somebody's time to teach you and answer your questions. But $10 can go a long way when it comes to the education side of things. So that's all that $10 is really going to get you. But moving into our next segment, the $100. So yeah, Taylor, what would you do if I gave you the $100?
Well, this again, you're building habits and actually investing towards something. Maybe it's something as simple as building your emergency fund or starting to pay off your high interest debt.
So the first smart move to make here is to start that emergency fund, and usually you're going to want to put that in a high yield savings account. So yeah, one of the main reasons we're recommending an emergency fund once you hit that $100 mark is one, you want to build those good habits, and hopefully every time you get around this amount of money or more, you're fully funding that emergency fund the best you can. And eventually you want to build that emergency fund to 3 to 6 months of your monthly expenses if you already have an emergency fund, or at least you have your highest deductible covered in a savings account. Then you're going to want to pay off your highest interest debt with that $100. So credit cards that are 20, 22, 24, 30% interest, we want to get rid of that as fast as possible. And putting $100 down saves you $24 a year on a 24% interest credit card.
All right, and since Ryan's already offered it, what I would do with $1,000 is actually a pretty big decision. This is where some real financial decisions have to be made because this has the opportunity to grow into actually some substantial wealth. I mean, $1,000 is nothing to scoff at. You know, again, if you have some high interest debt, you know, you kind of have a guaranteed return if you pay that off. Again, an emergency fund is great to have. That way you're not having to rely on some high interest debt like a credit card if something comes up. But if you get past those, you can really start investing. Say you start going towards retirement. Your employer offers a 401k match. You putting $1,000 in, and if they're able to match that, that's automatically 100% return on your money right there. Or a great option to put this $1,000 in is a Roth IRA. Now, we've talked about Roth IRAs in some previous videos and all the advantages that come along with that. Check those videos out if you're curious. But here you could just invest in the S&P 500, an index fund that diversifies your money for you, and just watch that money grow tax-free over time. For example, if you were to be able to invest $1,000 a year, say between 25 and 35, so $10,000 total, by retirement age, you have over $170,000. If you're able to up that frequency or do it for a longer period of time, of course, you have exponentially more money.
And the next best smart money move you can make with $1,000 if your retirement's already handled, in this point is going to be invest in yourself. I know we say that a lot, but in this case, you could spend that $1,000 on, say, professional education or professional certification that can directly boost your income. So it has direct ramifications. You could also start a side hustle, buy a little bit of equipment, maybe get a website off the ground, maybe get a little bit of inventory for your small business. That $1,000 can actually grow to be something special. So as you can see, that $1,000 gets a little bit more powerful. It can do more things and it can go further and you have more flexibility with it. So what next? What would you do if you had $10,000? I'm feeling very generous here and I'm giving you $10,000. What are you going to do with it? What's the financially smart thing to do?
Well, again, what I'm not going to do, I'm not going to go out and buy a car or some luxury thing. We've kind of hammered this home, but it is good to remind you, like, lifestyle creep is a dangerous thing. People fall victim to it. I've definitely fallen victim to it. This amount of money is actually where a lot of people get separated, because this is where you really start to get tempted. I mean, $10,000 is a lot of money. You know, $1,000 by all means is a lot of money, but at the same time, you're not like, oh, well, I can do whatever. $10,000 you start to be like, yo, I can do something.
I can
with
upgrade
this.
my car.
Yeah,
I can upgrade
yeah.
this. I can get the new phone.
I can go on that all-inclusive trip around Europe kind
Yep.
of thing. So this is really where some discipline comes in. So this could really be the difference between life-changing money and essentially wasting it away, and kind of building those habits where you never build that generational wealth that a lot of us are looking to build. So what you should do, again, kind of referencing the previous ones, if you have any high interest debt remaining, pay that off. Your emergency fund by this time should be fully funded.
Absolutely.
You know, your investment accounts like your Roth IRA, you should be contributing that fully, maxing that out. But if you're exceeding those, this is where you can really start to get creative. Start investing in things not only like a traditional brokerage, but let's say you want to put a down payment on a house. This can start building towards that, because part of the American dream is, you know, buying a house, all this and that. So this is where it really starts to become a reality.
And the key thing I want to point out that Taylor just mentioned is, as we're getting more money in this progress, we're building these habits and growing on these habits. We didn't suddenly get $10,000 and we're also suddenly really good with money. We got the $10 and we started investing. Sure, $10 isn't growing to be much, but it's building that habit. We got the $100 and we're not only investing, but we're also starting our emergency fund. We got the $1,000 and we're doing both of those as well as paying off high interest debt. And we're building and building. It takes a lot of time, takes a lot of progress, but once you're at that 10,000 mark, or you get into the bigger amount of money, it's so much easier because you've built those habits, you've built those foundations that you're good. You're like, oh, bigger number, but I know I need to do, like you said, my emergency fund, my high interest debt, that's not done. Okay, let me focus on that. Okay, now I can save for this. I finally want to get a house, get away from renting. Okay, that's my next step. You have steps to hit. Like, you're getting more amounts of money, but your habits are staying the same.
Yeah, because the complete opposite is the exact definition of lifestyle creep.
Exactly.
And that's what we're trying to avoid. If you have that $10 and you waste it on fast food, the next time you get $100, it's easier to be like, well, I'm just going to eat at a nicer restaurant.
Yep.
You have $1,000, like, oh, I get a
the new
gadget.
phone.
Yeah,
Yeah.
$10,000, ooh, a new car.
Yep.
The habit you build at the beginning is typically the habit you'll have even when you have more money. People are like, oh, when I have more money, that's when I'll start doing things.
Biggest
Right
mistake.
now, you know, $10, it's not going to do anything. I might as well. It's all about the mindset and the habits.
Exactly. So we hope we got that message across, but if not, we'll summarize it here at the end of the video for you. So the general rule you want to follow is you want to fund your emergency fund first, unless your debt is over 15 to 20% interest rate, because that's just directly fighting against you. It's a really strong power that's fighting against you, and you're trying to pay it off, but it's building, and you're trying to pay it off and you're just getting further into debt. So you do want to attack that as fast as possible. Then you want to go back and fully fund your emergency fund. Then you want to pay off what we call middle or high interest debt over 7% interest, other than a mortgage. Then you want to invest in long-term retirement accounts. Then you want to invest in income producing assets. And lastly, you're going to have lifestyle upgrades. So that's our last option. At the very end, we've accomplished all the other steps. Then we're going to say, look, we've done the hard work. We've built the foundation. We've built the house. Now we're going to start taking advantage, or we'll start taking the fruits of our labor. That's when you can really live it up. And you don't have to wait all the way to retirement, but the harder you work and the more you can build these habits faster you can probably grow that account of retirement or brokerage account or whatever other investment. Then you can start taking that fruit quicker.
And I hope you guys aren't getting stuck on the exact numbers, because you could scale this to whatever. It's really more about the mindset. I hope that's what you more so gathered from this video. But if you guys have any feedback, or you want us to go into more different numbers, what we would do with $100,000, what we would do with $1 million, we'd be happy to go over that in a video. You just got to let us know down in the comments below. But as always, we appreciate you guys tuning in. Be sure to like, subscribe, and stay tuned for next week.
See you guys in the next video.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting. You'll spend it and be broke again.